If you ever looked at your W-2s and wondered why there's different numbers, you're definitely not alone. Many taxpayers assume that when they see two different wage amounts that there's something wrong, but the differences are completely normal. Welcome back to the channel. I'm Joe, a licensed certified public accountant with over 15 years experience in corporate and public accounting. I have an extensive background in accounting, audit, and taxes, and I'm all about helping you take control of your money by living smarter. Be sure to subscribe to the YouTube channel and turn on all notifications. And check out our blog site where we post every Monday, Wednesday, and Friday. Today, we're breaking down one of the most confusing parts of a W-2 form, Box 1 versus Box 3. In this video, we are going to explain in simple terms what Box 1 means, what Box 3 means, why the numbers are often different, how retirement contribution affects both boxes, and what you should review before filing your taxes. By the end of this video, you should feel much more confident reading your W-2. Let's get started. Let's first quickly explain what a W-2 is. A W-2 is a tax form employers send to employees every year. It reports your wages and the taxes withheld from your paycheck. You use this form when preparing your tax return. Your W-2 contains several boxes, but today we are focusing specifically on Box 1 and Box 3. So, what is Box 1? Box 1 reports your taxable wages for federal income tax purposes. This is generally the amount the IRS uses to calculate your federal income taxes. Now, here's the important part. Box 1 is usually not your full salary. That is because certain deductions reduce your taxable income before federal taxes are calculated. Some examples of these deductions include a traditional 401 contributions you may have made, certain healthcare insurance premiums, if you have any flexible spending account contributions, and even health savings accounts contributions. So if you earn $60,000 but contribute $5,000 to a traditional 401k, your Box 1 wages might only show $55,000 before other deductions. That reduction can help lower your federal income tax bill. Now, let's talk about Box 3. Box 3 reports wages subject to Social Security tax. This is the difference from federal income taxes. Social Security taxes helps fund retirement and disability benefits through the Social Security system. The key thing to understand is that Social Security tax rules are different from federal income tax rules. Some deductions that lower Box 1 wages do not lower Box 3 wages. For example, traditional 401k contributions usually still count towards Social Security taxable wages. That means your Box 3 amount is often bigger or higher than Box 1. Let's look at an example. Imagine your salary is $60,000. You contribute $5,000 to a traditional 401k, and you have $2,000 towards a qualifying health insurance. Your Box 1 wages might drop to around $53,000 because those deductions reduce federal taxable income. But your Box 3 wages may still be closer to $58,000 or even higher depending on the payroll deduction. That difference is completely normal. This is probably the biggest question people ask. And that question is, why are the numbers different? The answer is simple. Box 1 and Box 3 follow different tax rules. Federal income taxes allow certain deductions before taxes are calculated. Social Security taxes treat some of those deductions differently. So the same paycheck can create different taxable wages amounts. That does not automatically mean there's a payroll error. There's another important factor we have to look at. Social Security tax has a wage cap. Every year, the government sets a maximum amount of earnings subject to Social Security tax. Once you earn above that limit, Social Security tax stops for the rest of the year. So if someone earns well above the annual wage limit, Box 3 may stop at the maximum wage base, while Box 1 continues higher. That is another common reason the numbers may not match. Another important topic is retirement contributions. Traditional 401k contributions reduce Box 1 wages. Roth 401k contributions usually do not. Why? Because Roth contributions are made after tax dollars. So if you contribute to a Roth 401k, your Box 1 wages may be higher compared to someone contributing to a traditional 401k. Understanding these differences can help you to better plan your retirement strategies. So, should you be worried? In most cases, no. Differences between Box 1 and Box 3 are very common. However, you still should review your W 2 carefully. You want to check for things like your name and your social security number, your wages, your tax withholdings, your retirement contributions, and your employer information. If something looks wrong, contact your employer before filing your taxes. Employers can issue corrected forms if needed. So, what's our final takeaway? The biggest takeaway from today's video is this. Box 1 reports federal taxable wages. Box 3 reports Social Security taxable wages. The numbers are often different because the tax rules are different. Once you understand that concept, your W-2 becomes much easier to read. If you found this video helpful, hit the like button and be sure to subscribe for more tax tips from a licensed CPA. And as always, be sure to consult with your qualified tax professional about your specific situation. And be sure to come back next week where we'll be breaking down how to file your tax returns for the first time.